Let's talk about Bitcoin. It is Friday, July 23rd. We are going into the weekend, and Bitcoin has had some interesting price action here the last couple of days. So let's jump on in and take a look and see if we can figure out what in the world is going on. And more importantly, where is Bitcoin going? Friday, July 23rd. I am on the East Coast. One thing to keep an eye on as we go through the weekend, and I've talked about it before, is that Sunday price action. It seems like Sunday, 6 p.m. Eastern Standard Time. The last couple of weeks, Bitcoin has had some big moves. The other thing to take a look at when we get into the price action in a minute is the other day when we saw the big move in Bitcoin. It all happened pretty much across the board. Big moves lately have been happening the same day at the same time across a bunch of different assets, Bitcoin, Ethereum, pretty much all of the top market cap coins. If you look at their price action, we'll look at the charts in a minute. They all look almost exactly the same. And I'm going to show you something that's even more interesting. So before we get into the chart and start talking about Bitcoin and the specific price action that we're going to look at, and we saw the last couple of days, what should you be keeping an eye on moving forward? You want to watch traditional markets. So money's flowing back and forth between cryptocurrency markets and traditional markets. The traders that trade stocks, options, futures, currencies, Forex, things like that are trading cryptocurrencies as well. And they're moving money back and forth. So you can see a big correlation between the markets now. We're going to take a look at that in a minute. But as long as markets are up in general, the traditional markets are up, Bitcoin and cryptocurrencies are going to stabilize and they're going to kind of continue on the sideways path that we've been on, boring the heck out of everybody, waiting for clarity, waiting for the clarity and certainty on what's going on with the pandemic, what's going on with the economy, what the Fed is going to do. Once the Fed starts easing into their new policy, which is reducing their bond purchase program and raising interest rates, and they start easing the markets into that, you're going to see some changes. The market will digest it okay. Initially, you'll see a little bit of a taper tantrum like we saw a couple of weeks ago. And once the market realizes, wait a minute, the Fed is behind the eight ball and they're going to have to accelerate policy change, meaning reduction of bond purchase program and increase of interest rates, then you're going to see significant movement in the markets. And that's kind of what crypto is waiting on. That's why investors are not putting a ton into the crypto markets at the moment. When I say investors, I'm talking about the large institutional investors, hedge funds, family offices, things like that. The people that I'm talking to on a regular basis, they are not super excited about Bitcoin and crypto at these prices. They still see them as overinflated based on historical one-year values. Pretty much everything is still well above, and we'll look at that in a minute, where they were a year ago. So you want to watch the markets. But if you look at, let's just look at year-to-date percentages. And I mean, Telcoin is up 9,000%. Axe Infinity is up 5,000%. Matic, that took a big beating over the last day or so, you would think Matic is way down. It's still up 5,000, well, 4,800%, 3,100% Dogecoin. Dogecoin's really gone through the ringer, and they're still up 3,100%. Pancake Swap, 1,800%, 1,300. So you go down the list, and you can see that most of these coins, most of the cryptocurrencies are still way, way, way up year to date. And if you look at the history of them, way, way up for the history of these assets. Let's look at Bitcoin right now and Ethereum, because those are the big two. So Bitcoin is up 10% year to date. And it's Ethereum's up 170% year to date. But if you look at Bitcoin, and if you look at all time, it's still way, way up all time, right? I mean, if you go back to the beginning of Bitcoin when it was, $1, $10, $100, and just look at where it went to at 65,000, and then where it's at 30,000, it's still way, way, way up over the lifetime of the asset. So that's what these institutional investors and professional investors are looking at, family offices, which is what it's going to take for broad scale adoption. They want to understand the entry point and make sure, because they do have a long-term horizon, they're not so concerned about price in and of itself. What they're concerned about is what's the long-term potential of that price. So if I enter now, where's it going to be in 10 years? Is it necessarily going to be 10 up, tenfold up from here? Or will it be in a cycle where it's down? So that's where the institutional investors are looking for that price discovery. They want to make sure that they enter at a price point that they're fairly comfortable is not going to be down in 10 years from now. And then there's other institutional investors that just are not going to be able to invest in the asset because of their charter, their corporate mandates, things like that. They just, physically, literally cannot invest because they're just not structured to invest in these types of things. And that's what you heard out of BlackRock with institutional investors that are investing in bonds and things like that. I mean, they just can't invest in risk assets. And it's not just cryptocurrencies and Bitcoin, it's risk assets. So that's a whole different investor and a whole different thing that BlackRock was talking about when they said we don't see demand from these investors in this area of their company. And that's just their bond clients. And those are the types of products that they're investing in. They're looking for annuity type, bond type investments that are highly rated, very low risk versus like the stock market, which is all risk on. Cryptocurrencies are risk on. So let's take a look at the chart and look at what's going on here. So what did we have over here the other day? And this was on the 20th, 3 days ago now, when we had the big drop. Then we bounced around the bottom here a little bit for basically a couple of days through the 20th and the 21st. We had that big drop. And then we had that big jump the other day ahead of the B Word conference, the Bitcoin conference with Cathie Wood, Jack Dorsey, and Elon Musk. Everybody kind of expected that. So what do? You buy on the rumor, sell on the news. And this one happened the other way around. It kind of sold off on the rumor and then bought on the news, and we've been uphill ever since. So this was somewhat of a bear trap here. And then we have what's essentially somewhat of a bull trap going on right now. The question is, where are we going from here? But before we get there, this is Ether, almost the same type of price action, a little bit more spotty, but you had the big sell-off basically on the same days. And if you look at these candles and look at the charts, they're basically the same time on each day, the same legs up on each day, and we're kind of here right now. But watch this. This is what's really interesting. Look at the silver chart. Silver's kind of tracking a little bit along sort of the same timelines. But what's really interesting is the S&P, look at that, the big drop on the 20th and the 21st, and then the same rise here the other day, just like we saw. Let's look at the NASDAQ, same kind of thing. Here's your big drop, hit around the bottom, shot straight back up. They're not really tapering off. The Dow's, tapering off a little bit, but same kind of thing. Drop down, bounce around the bottom, shot back up. So if that doesn't look really close to Bitcoin, not exactly, obviously, but this is the area that we were just looking at, a little different, a lot more volume going on in those markets than Bitcoin. One of the problems Bitcoin has, and or opportunities, depending on how you want to look at it, is there's not a lot of volume right now. So it's easy to move the price. And this is market maker driving and creating liquidity to fill the orders, right? Wherever you have a buyer, you have to have a seller. Wherever you have a seller, you have to have a buyer. The market maker is the one that fills those orders, creates liquidity for the ultimate destination of the price. Now, in this thing, as you know, I like to look at patterns and trends in the market. When you look at the big picture and you zoom out a little bit, I'm on the hourly, so let's go ahead and look at the daily here. When you look at the daily, we are still on a downtrend. Here's our uptrend, and here's the thing. Where did all this take place? From the 20th of September to the peak, which was around April of 2021. So from September of 2020 to April of 2021 was that bull run that we've been in. Before this would be your blow off top. If you want to say we had a blow off top, it would be right here. That was your first initial snapback that continued down along the downtrend. And where did the real takeoff parabolic move occur? Well, you could say it occurred here on December 20th, or you could say it occurred here around January 21st. But either way, let's take the biggest move about this point here from December to the top would be April. So you still have basically 4 months right there from going from basically, let's zoom in here a little bit, basically from about 17,000 to 60,000. Okay. That's about a 4.5x, 5x, right? From 17 to 65, or yeah, to the top 65, we have that wick up there from December through April. And then from here, of that 30,000 range to 65 basically took place from, let's go about right here, January to April. So again, pretty close within 3 or 4 months. So the question is, if we did have an immediate snap straight up coming off this kind of price action, where have we seen something similar? Because a lot of people are projecting 100,000 by the end of the year. Is it possible? And not only possible, but is it probable? Meaning, is it likely? Is it potentially something that could happen? Well, we just saw that we had a snap up to 65,000 from the 30,000 range in basically 4 months, from January to April. So we have basically 4 months left in this year to get back to 65 and then beyond. So have we seen anything along the way that would get us there? When you start zooming in a little bit, it doesn't look as steep as when you're looking at it a little bit closer up to try to identify some of the similar price action patterns that we've seen, where you've had a big dip on the daily, a little bit of a rise, a little bit of a dip, you bounce around, and then you're off to the races. This is that 30,000 range back in January of 2021, earlier this year, before it shot straight to the moon to 65,000. Not exactly the same kind of price action. We can even look at it on an hourly to kind of get a better understanding of what's going on. I mean, here's one of those sort of the same type of thing where we had a big candle down, bounced around, had a candle up, bounced around, up another leg, bounced around, then we down, down, down. Oh, this is July. This is right now. Shoot, the hourly zoomed me in. I'm looking at the wrong time frame. Sorry about that. Let's get back over here to the other side as we were coming up the mountain. When you're looking at it on the hourly, it's a little trickier to pinpoint it. So we were trying to get back into the January. Here we go. It's right in this area here where we have these January timeframes before this big run up started. You can see a lot of these types of patterns where you get a little bit of a dip, you bounce around the bottom, you get these big candles up. Now, remember, you always have to err on the side of the trend. We are in a downtrend right now. So I'm just talking about what's the potential upside potential that we can snap out of this thing, and what would that look like compared to where we are now. So here's one here where we were at 34,000. This is back in January, dropped down to 32,000, kind of in the range we're at now, where we had this big drop right here from basically 38,000 down to 33,000. We had a big candle up, and this is all in January. We were talking about January, the first of the year, with this crazy price action that was going on, and Bitcoin's just all over the place. You can see how it's stabilized. We'll go back to the other side of this year right now. But here's where we came off a little bit of a downtrend towards the end of January. It starts shooting up, we're bouncing around, and you get a lot of that up, down action, up, down action. And then here's a big candle up. So this jumped from 32 to 38. So that basically happened on an hourly time frame from 8 o'clock right here, January 21st at 0800 hours, which is 8 a.m. Eastern Standard Time, until 1600 hours, which is 4 p.m. Eastern Standard Time. So about a 4-hour period, 1, 2, 3, or about an 8-hour period, I guess it is, somewhere around there, where this thing jumped from 32,000 up to 38,000, and then it dropped straight back down in about the same amount of time. And then we bounced around sideways again, then it dropped off a little bit. And then here's a little bit more of that price action that's in the range that we're in, from that 34,000 down to 32,000, bounced around a little bit, had a big candle up, bounced around, another candle up, leg down, up, leg down, up, leg down, up, and then up, and then up, ultimately getting you to the all-time high. So that's kind of how it happened back in January of this year, before the all-time high. So let's take a look at this price action here, and you can kind of see where this happened. And you can go back and look in the charts, and you can find a lot of different scenarios like this, where we basically dropped from 7 o'clock to 2 o'clock. So a couple hours down, a few hours up. These are all hourly candles. So 1, 2, 3, 4, 5, 6, 7, basically a 7-hour period, you're dropping from 31 down to 30, and then you're dropping from 30 down to that 29 that we saw recently, bouncing around, shooting up. Now, here is the question. Where do we go from here? So remember, you have to respect the trend. We're in a downtrend right now. So the most likely scenario, what's most likely probable, is we're going to continue to the downside. This is a downward continuation pattern. And it's kind of setting people up, right? It's trapping people going short, trapping people going long. And what are the market makers doing? They're stopping everybody out, right? They're catching everybody at their stops. They're buying that and selling it back to them on the way back up for the longs. So they're just buying and selling from the same people, stopping them out each way. They might be breaking even. The buyers and sellers, they might be making or losing a little bit. The market makers creating liquidity, making the money to ultimately drive price down, where they are hunting for the biggest volume and the biggest price action and activity, to where they feel like they're going to have the most buyers. And then the best thing to do is you can go back in the charts and you can look for different scenarios like this, because it happens over and over all along the way. Even in this recent downtrend, we've seen big wicks down, a little bit of bounce, big wick up, a little bit of bounce, big wick up, a little bit of bounce, and then down, up, down, up, down. And each time we're setting lower highs and lower lows. So that's a continuation of the downtrend. So what do you need to know to reverse that? You need a reversal, meaning you need to be setting higher highs and higher lows to continue an uptrend and ultimately break past that 50,000 range, which is the big differentiator of reversing this downtrend. There can be bull traps along the way, anywhere along the way during that as well. And ever since we had the all-time high in the 60s, we've seen a bunch of different scenarios exactly like we're going through right now. So that's what you want to look at. You want to look at what has the market maker done all along the way to where we're at now, and what is it that they're trying to get you to do now. So you have to remember, when you think about what's going on, who is the market maker? Who is the composite man on the other side? It's the individual that's trying to get you to do one thing or another, or think one way or the other. So you have to think from their standpoint in terms of what it is they're trying to get everybody to do when everybody's looking at the same thing. And you've heard the old saying that, you know, whatever you think the opposite's going to happen. That's not always true, but there are a lot of people looking at the same thing, expecting the same thing. So sometimes giving you the opposite of what you expect is to give you exactly what you expect. So that's kind of where we're at. Now, the other thing is, a lot of this is just automated. As I showed you, that price action, and let's take a look at recently here, because this is what's really interesting. So a lot of this is algorithmic automated trading that's going on, triggered on different price movements, triggered on different volumes, different time frames, the, you know, if this then that kind of scenario, and even just a general trend of the market maker saying ultimately we know there's the biggest appetite for buyers at a certain level, 20,000, 24, 27, 15, whatever it is. They have a target that they're hunting, and they're stopping people out all along the way to create the liquidity to ultimately get to that target, where the biggest bulk of the buyers are going to jump in before you can be off to set an all-time high again. So a lot of this is automated and algorithmic. And if you look at, like we said, Ether, and look at that chart, let's just go pick anything. I'm just going to spin randomly here, and let's just jump on Avalanche. I haven't looked at Avalanche, haven't checked the chart, but let's just take a look at Trading View, and let's see what the price action looked like on Avalanche here on an hourly for the last few days. So there you go. What does that look like? And that was just a totally random coin. Had no clue what I was going to land on. And let's go back to Ether. Look at that. Bitcoin, look at that. And look at Avalanche. So that just tells you right there that there is a business plan in place. There is a program in place for this price action. There is a thesis in place for this price action. There's a reason for what's going on. And a lot of it is driven by automation. It's not the retail trader jumping in. It's not the whales buying or not buying. This is large investment funds, market makers driving price action to an ultimate end and to an ultimate goal and destination. And you want to be able to anticipate that. You want to be able to expect it. You want to be able to prepare for it and understand what's going on. is that number one, we're not going to be shooting to all-time highs anytime soon. We have to get down and we have to put a bottom in. How do we know where that bottom is? Number one of the things that we talked about was on the daily to look at this hash ribbons indicator, the buy signal. You need to print a blue buy signal in the hash ribbon indicator, meaning these two ribbons need to merge back. And we're not there yet. We're not even getting close. We still have a lot of gap to close there. So when this starts coming back together and consolidating, you're getting closer to a bottom. You're getting closer to that potential buy. The other thing to watch is the markets. Okay, there's a lot of liquidity being pumped into the markets right now due to Fed policy. And until that changes, nothing else is going to change. We're going to continue to range sideways here, maybe a little bit lower, maybe a little bit higher, between that $30,000 and $40,000 range. We could get as high as up into the 40s or upper 30s, low 40. I don't see it breaking 40,000 anytime soon, and then down to the low 30s, maybe into 29 here and there. And before it bounces back again, and we could see that up and down, up and down, up and down. So what that's going to do, number one, it creates a lot of liquidity for the market maker. Number two, it fatigues the retail investor and gets rid of a lot of the smaller players in the market, gets them out of the way, so that when that move down happens, the bigger players can buy more product because there won't be as much competition. The price will stay lower longer. They can accumulate more without really driving price action. So at the end of the day, what is the goal of the institutions? It's not that they want to basically remove anybody from anything. What they're really looking to do is buy the most of the product that they can buy without disturbing the market and jacking the prices up on themselves. So they want to accumulate, they want to buy as much as they can without raising prices and without bringing a lot of competition in, so that when they do start making their move, they don't have a lot of other people bidding against them, driving prices up. Now, a lot of the institutions are setting up desks. They're positioning themselves to get into the market. So the competition is there. They're creating competition. So that's one equation that could potentially look to the point to where we don't get a whole lot lower from here, and that the bottom could very well be put in here around the low $30,000 range. If more and more institutional investors get into the game, and there's less supply coming to the market, and they just have to pay what they have to pay. So the bottom very well could be put in here. And that's kind of what they're trying to figure out as well as this range happens, is to see who they can shake out of the market, what the ultimate bottom line price is going to be before we can head off to the races again. And a lot of people expected bull traps along the way with a big reversal and then a trap around 40.50. And, we kind of had one right here. We kind of had a little one here, and we've had another little trap scenario going on here. So they've been little ones along the way versus that big reversal bull trap that everybody's looking for before an ultimate bottom is put in. And that may or may not happen. So a lot of it hinges on the traditional markets, what the Fed does, and how quickly other institutional players and family offices and higher net worth retail players can get in and really start putting buy pressure on this asset. Because at the end of the day, it's all about supply and demand. It's all about buyers versus sellers. And that's what ultimately drives price action, is who's in the market, what are they buying, how much are they buying, how fast, and what is the supply going to the market. So that's ultimately what drives the price action. Competition creates demand, which drives prices up. So the interesting thing is, like I said, is to take a look at the price action. It's really fascinating what's going on and how identical price action is across a lot of the altcoins and the Bitcoin, Ethereum market, and how that looks compared to the stock market. Gold is very different. Silver is the closest looking chart, and oil was kind of looking really close too. So money's flowing in and out of all these assets because it's basically Wall Street that's driving this price action. The market makers are driving the price action, and the rest of the retail market is just kind of along for the ride, which is fine, because they're going to show you their hand at some point, and you'll know your entry point. You'll know the bottom based on that hash ribbon buy indicator signal, as well as what the stock market ultimately does. When the stock market bottoms, you know that crypto is bottomed. When the Fed policy is clear, we understand what reopening looks like, what this new Delta variant looks like, what the economic horizon looks like, well, then we can start to put a bottom in. Until then, it's all speculation. It's all liquidity creation and generation for the ultimate move to the down or upside, whatever happens in terms of the markets and things like that. But everybody's in defensive mode right now. Treasury yields are way down. So that tells you that money is still going into risk assets. If bond yields start to rise, interest rates rise, the Fed pulls back on their quantitative easing, then you're going to see big changes in the markets. That's when we can reach the bottom, and then we'll be off to the races.